So if you're a day trader, then you want to actually see yourself as a wage earner. Now, wage earners get a result or income of their effort per day. What that also means is that if you end up becoming a day trader, then you must understand that you are working to get paid on a daily basis, right? Now, the good thing about becoming a day trader is that rather than working 8 hours, which usually somebody who is a wage earner would be doing, right, when they're working for a company, they go in, let's say 7 o'clock, they have to work throughout the day till like 3. As a day trader, you're not necessarily going to go through the same routine, right? Now you can literally work about an hour in a day and then you're fully done, or you can work, let's say 2-3 hours, right? But we'll get into the details for you to understand that as well. To share with you my little experience as a day trader, when I actually started trading, I actually started off as a day trader. I was basically switching between day trading and scalping, right? There's just a very thin line of difference between day trading and scalping, but I think that in this session I'm going to clarify the major difference between day trader and a scalper, right? It has everything to do with specifically like the time frame, right? And then sometimes we consider the pip value accumulated as a scalper as to a day trader. In my own opinion, if you ask me what is the best way to get started as a trader, I will tell you that you need to start as a day trader or perhaps even a scalper. Why? Because that allows you to go through the stressful routine that traders need to go through. It prepares your psychology. It gives you the aptness to be steady, the discipline, the psychological barriers. And then once you're able to deal with all these, then you can become any type of trader, whether it be the day trader, scalper, swing trader, position trader, because you've literally been through all the rocks and the struggles, and then you can adapt to any terrain that you want to fit yourself into. Now, it gets confusing if you start to decide that, well, you want to become a day trader because you're perhaps wondering where should you even start from, right? It has everything to do with time management. So being a day trader does not necessarily mean that switch your computer on, look at the chart, sit by it, and then start marking up things, and then you think you're working, right? In real life, most people tend to even disregard day trading as a real job. If somebody ever gets to know that you're even a day trader, you usually get them tell you,
go get a job, day trading is not a job, and blah blah blah.
Right, but let me tell you, day trading is actually a full-time job. It depends on the attitude you put towards that, right? And I'll give you a little bit of just into what it takes and then the attitude you should implement to get you to feel like you're actually working when you start day trading. Now, in my instance, I studied accounting from the University of Ghana Business School, right? And then when I was done with school, most of my colleagues got jobs in oil companies, in auditing firms, in accounting firms, and so on and so forth. But I decided to be a full-time trader, which meant that as at the time where they are going to work at 8 and then perhaps close in the evening at 5, I have to be seated by my desk, also trading on the market, literally regarding myself as working. This brings us to the main point where I said day trading has everything to do with the attitude and approach you want to deal with it. Because at that point, nobody is there to warn you, nobody is there to give you tasks, nobody is there to correct you, nobody is there to check your time management, and then if you're done with an assignment or you've submitted a report, or you're really putting in the necessary work to do the work that is required. So time management has everything to do with the first step of deciding to be a day trader. So as I gained experience, I realized that with my style of trading and then my currency pair of focus, which has to do with the pound, then it meant that I had to restrict the time frame in which I traded on, which basically meant that I had to be strict on the London day trading session. And then if you're familiar with the London day trading session, you know that the London peak hours is between the early morning hours all through to 12 in the afternoon. That is GMT. So it meant that I have to wake up at 5 a.m., sit by my chart, work through the chart till it's like 12 or 1 p.m. before I get done with trading. Like I earlier said, the interesting thing is that sometimes you get to sit by the chart and then within an hour, you get the move setting in the right direction. You take your trade, you make some profit, and then you're done for the day. Sometimes I get to sit by the chart for a long time because some of these moves that you're brewing are yet to set off in the direction you are anticipating. So then what it means is that you have to sit back, relax, and wait until the time is right for the move to go in the direction you are anticipating for you to be able to catch that move. Now, the real difficulty is that what if it takes about 3 hours, 4 or 5 hours, or perhaps even a full day before that move sets in? It means that as a day trader, you got to be seated for that 4 hours if you genuinely still want to catch that move. Now, this might probably be like the most important point to learn if you want to start day trading, right? If you want to be a day trader, it is very important that when it comes to the chart work, which you're going to visit briefly, you want to focus on the lower time frame. And by lower time frame, in my standard, I regard any time frame lower than the 1 hour time frame as a lower time frame. So you want to really be focusing in between the 15 minutes and then the 1 hour time frame. It could be you watching the 15 minute, the 30 minute, the 45 minute, or perhaps even the 1 hour time frame itself. Now, why I choose this time frame is that it allows you as a trader to see the real momentum that is taking off in the market at any particular time that you're seated by the chart, as to watching the chart on a daily time frame, weekly or 4 hour, right, where it takes quite a considerable amount of time to see the real volume running through the market. Now, to touch a little on the time frame as well, right, so if you really are familiar with the market, you know that we have majorly 3 markets that play across the financial market, which is the Asian market, the New York market, and then the London market, right? So if you're starting to day trade, you should really know the currency pair you're trading or any asset class you're trading, and then the kind of market that you really want to be focusing on, right? So if you're trading the pound pairs, or if you're trading any stock that pertains to the European economy, then you really want to be seated during the London trading hours. If you're trading the Antipodian dollars, which is the New Zealand or Japanese yen, then you really want to be trading during the Asian session. And then if you're trading any USD crosses, then you really want to also sit through your chart during the New York trading session. So I think this basically gives you a brief overview of how I look at day trading and how I also basically got started day trading. So next, what we are going to do is just me going back into the charts and then show you my day trading strategy and how I day traded consistently for about 2 years of my trading life. So onto the chart work, what we're going to be doing is basically focusing on one currency pair. In fact, you guys know that if you follow me for a long time, GBP USD is my favorite currency pair. Now, I'm going to use that as a good perspective for us to understand how we're going to be day trading. Now, we're going to start off with a very short exercise, right? So if you want to day trade, like I said, favorable time frame that I recommend for you is the 15-minute time frame. What you want to do on the 15-minute time frame, especially if you're using TradingView, is that you want to break it into daily basis. So now that we're done with the whole markup, right, what I want you to see is that basically if you look around this range, everything that transpired in that particular week is what is here. Now, how could you have taken advantage of this looking at it from a day trader perspective? So looking at this basically spells out Monday, Tuesday, Wednesday, Thursday, and Friday. To give you a little bit perspective as well, the first quarter of this signifies the Asian session, then the next quarter signifies the London session, and then the other one signifies the New York session. It's the same throughout. Asian, London, New York. Asian, London, New York, and so on and so forth, right? You should understand that the very characteristics of the Asian session is that it likes consolidating a lot. So as a trader, what you really want to do is that you really want to keep your eyes, especially as a pound trader, you really want to keep your eyes on what the market is doing during the Asian session. Usually, like I said, being characterized by a lot of consolidation, it means that there isn't going to be much of volume going on during the London session. So you really want to mark out what happened during the Asian session and then use that as a basis to determine what could potentially happen in the London session. They want to take advantage of that. Looking into a zone like this, right, so you can clearly see that what in this particular example, we would have been stuck in this Asian range throughout the day until the market decided to break out of this Asian range and then trading on the downside. If you want to take advantage of this kind of opportunity, that's how basically the market would look like. So the moment you observe any break in that Asian range towards the downside, then you want to take your trade for a sell, putting your stop loss right above the range, something like this, which in this case you're risking about 19 to 20 pips, right? And then you're targeting a risk reward of 1:2. You know, if 1:1, it doesn't matter, because you should understand that in this instance you're basically day trading, right? If you take this kind of a risk, then obviously what you're going to have to expect is a quick push on the downside, which basically fulfills your take profit of about 29 to 30 pips, which is enough for a day trader, right? So in this instance, if you put on a one lot, you basically just captured $300 from the market. And as a day trader, you should understand that it's all about accumulating small profits along the day, each day as it comes, and then at the end of the week, it makes sense that you made any money on the market as well. I think this one gives you a first-hand experience of what to expect if you want to day trade. Subsequently, I'm going to shoot more videos detailing strategies that you can use into day trading, look into the 30-minute, 1 hour, and all other time frames as well. If you love this content, basically smash the like button and share this content with your friends. Subscribe to this channel if you haven't done that already, and click in the link in the description to join the KOJOFOREX Telegram community. I send out day trades and swing trades as well for my community members for free. Without wasting much time, I believe you guys found value in this, and I'll see you guys in the next one. Peace.